What's up, investors, and welcome back to my new video where we are going to talk about my beloved Tesla. Tesla holds a special place in my heart as it was the first company I invested in, and for a long time it was actually the only company I had money into. Tesla was in my radar for about 2 years now, but finally on 18th of March 2020, after the huge dip due to the pandemic and the lockdown, I got my first ever share, and it was in a company I believe the most. The price then was about $85 if we adjust the split, which is 750% up now and over 930% from all-time highs. And in this video we will take a super in-depth look and talk about Tesla, and we will discuss everything from the business model to the stock price. So prepare for a big and informative video. But first, don't forget to invest in the like button and subscribe to my channel with notifications on to become a member of Notification Investors. Alright, let's start. Tesla is the world's leading EV manufacturer with the best electric cars in the market, and that's not my opinion because I invest in Tesla, that's a fact. Many people look at the market cap, which is more than all the car companies combined, and they also look at the P/E ratio, which is more than 1,000, which means Tesla is valued 1,000 times more than their current earnings, and also they are valued more than all the car manufacturers combined. Looking at these numbers, it's normal that someone that doesn't understand Tesla will think the stock is overvalued. My response to this is that yeah, of course, if you look only today, the stock is overvalued. But if we factor in the next 5 to 10 years of exponential growth in a disrupting industry, then I think the price is actually undervalued, and I would like to explain to you why I believe this. To start off, no other car company comes close to Tesla in terms of technology, range, price, performance, and most importantly, software. No one is remotely close to Tesla. Teslas are basically a computer with wheels. But the greatest achievement of all of this is that they build their cars without outsourcing their parts. They have basically the machine that builds the machine. No other car company does that. That gives them the ability to do everything way more efficiently, cheaper, and better. Adding to that, we can't ignore the fact that Tesla is an engineering genius. They have the best engineers in the world, and they strive to find innovative ways to do everything. I could go on and on talking about every small thing that they're doing differently and better, and how a lot of small things result in a huge impact, but the video will be really long, so let's keep going with the main parts that I want to talk about. Looking at vehicle sales, there were almost 500,000 vehicles sold in 2020. That's an increase of 38% year over year. Keeping in mind that in 2020 we had the pandemic that impacted all businesses, including Tesla. The pandemic also prevented a lot of people and scared a lot of people away from buying electric cars or cars in general due to the uncertainty for the future. Now, total revenue grew 46% year over year in Q4. This was primarily achieved through substantial growth in vehicle deliveries as well as growth in other parts of the business. At the same time, vehicle average selling price declined by 11% year over year as product mix continues to shift from Model S and X to the more affordable Model 3 and Model Y, which are great cars. Now, more Teslas on the road lead to more data collected for full self-driving, and we will talk about that a little bit more in depth in a bit. Also, their factories were shut down for sometimes this year, actually the previous year, 2020, which also affected production and delivery numbers. As I stated earlier, Tesla builds the machine that builds the machine, and by doing that, they achieve better gross margin than the competition. Right now, gross margin is around 24%, but I strongly believe it could reach 27 to 31% in the future as they continue to be more efficient and scale their factories. And by scaling the factories, I mean keep producing more and more vehicles from the same factory. As of today, no factory is at full capacity just yet. Right now, they have 2 factories up and running with a total capacity of 950,000 vehicles per year. Fremont can have a capacity of around 700,000 cars per year by 2023, and Shanghai around 250,000 by 2023 as well, and maximum capacity from Fremont could be anywhere from 150,000 to a million long term, and Shanghai, I believe, from 1.6 million to 2 million cars per year. And two more factories are almost finished, the Berlin and Austin facilities, and I strongly believe they will be finished and running before 2022, but I guess only time will tell. Probably their production scaling will be much faster than the previous factories. And finishing about factories, uh, I'm 100%, actually not 100, 1,000% sure they are going to keep continue building factories, and each factory will be faster, easier to build than the previous one. Balance sheet wise, Tesla finished Q4 2020 with close to 20 billion, I repeat it, $billion on cash, and their Bitcoin investment has almost doubled from 1.5 billion to almost 3 billion. With that much cash, they can continue building factories, invest in full self-driving, continue scaling, continue innovating, building better cars, more affordable cars for every need, semis, roadsters, 3 Y2s in India, China, Europe, USA, Australia, everywhere, and they will be able to go through any collapse if something goes wrong. I would like to touch on deliveries now. First quarter is always the weakest regarding car sales, historically, period. But Tesla deliveries were the most they have ever been. My conclusion seeing these numbers is that demand is still growing rapidly even at the worst quarter of all. So imagine what Q2, Q3, Q4 deliveries will be. We hear that competition is coming, but the hard truth is that Teslas are better in every category, especially in value. So it's hard for people to pick something other than Tesla if they value their money and what they get for what they spend. I would like to share with you my chart with deliveries estimates from 2020 to 2030. Keep in mind, Tesla in the next year will have 4 factories with total production of 7 million cars where they are fully scaled, around 2025 actually, and they will keep making newer and bigger factories over the years. So that's why my chart looks like this. A lot of you will say this growth is impossible, but keep in mind, when we see innovative technology in a new and highly disruptive field, we see exponential growth, and the chart follows that pattern. In the chart we can see it follows an S-curve. This year's estimate is around 900,000 cars, and by the end of the decade it's 20 plus something million. And after that it will continue to have an increase, but a smaller increase in my opinion. Maybe we will see it being steady for a few years from 2032, for example, to 2035, or even decreasing a bit, but it will be in 20 million cars per year or more. Mark my words, this is how the line is going to look. Maybe I will be off a couple of million vehicles, some maybe not 20 plus millions in 2030, but 19 or 21, but the pattern will be like that, an S-curve. Now let's talk about the elephant in the room, Tesla's full self-driving software. It's safe to say that FSD is miles ahead of any other system that exists right now, and will probably continue being miles ahead of any system that will come in the future. The car can drive fully autonomous if you have the FSD beta right now and can drive fully autonomous. It accelerates, changes lanes, stop at traffic lights, stop at stop signs, read signs, and soon more Teslas will have it as well. Actually, in a month or so, Elon Musk said that they will have an update and more cars will have fully FSD. With this software, Tesla has a lot of ways to profit from it. To start, FSD will almost pure profit. They can sell it with a card for extra like they're doing right now. For if you want the FSD, you have to pay I think 7 or 10,000 K, and in the future they may increase that. They can have subscriptions monthly, quarterly, yearly, whatever. They can sell it to other companies, for example, truck companies or delivery companies, and much more ways to profit from it. There's no doubt in my mind Tesla will be the first with FSD that they will solve the autonomous problem. And I will create another video talking in depth about the enormous number FSD will produce. Also, we can't ignore the fact that There is the possibility for robotaxis, which will basically be like Uber. Imagine Uber right now with no driver, with electric car that is much more efficient, no driver as I stated, and way better profit margins and way cooler to be honest. But the bottom line for now is that FSD alone can make Tesla $1 trillion company. And I will create another video talking in depth about full self-driving. But right now I just want to touch on the main points briefly. To add to all of that, Tesla also builds their own batteries and places them in the Model 3 and Y from China right now. But in the next year, every new Tesla will have these batteries. The cell battery price is $142 per kilowatt hour, while the industry average is $186 per kilowatt hour. That's 30% less. And let's keep in mind that this isn't accounting for Tesla's new improved 4680 cells that were presented to us on Battery Day, which is 50% less in terms of cost than the current technology. So in the next 2 to 3 years, cost of battery for Tesla will decrease dramatically, giving them an even higher gross margin. Could Tesla sell their batteries to other car manufacturers? I believe yeah. With the huge difference in technology, legacy automakers will have to get Tesla's battery if Tesla sells them to them in order to compete with them. So I find it highly possible to see something like that happening. Also, if you liked the video thus far, please consider hitting the like and subscribe button. Now moving on, at the energy side of business. Elon Musk himself stated that this part of the business will be the same or even larger than the car business. Here is a list of the world's largest companies by revenue. Number 2, oil and gas. Number 4, electricity. Number 5 to 7, oil and gas. Number 8, automotive. As we can see here, energy sector is much larger than the automotive one. Tesla is here to capitalize on both of these fields, and many people overlook the massive opportunity in the energy sector. Tesla updated their utility section, so let's take a quick look. 40 plus countries with industrial size installation. Let me repeat that. Tesla has industrial size installation already in more than 40 countries. Over 6 gigawatt hours deployed and over 1,000 industrial sites in operation already. That's massive. Built for scale, every year electrical grids around the world add more renewable energy. Our grid scale batteries and software control store and dispatches this energy. So let's stick here for just a moment. Tesla is involved in the energy generation, energy storage, and energy supply. The supply part is extremely important, resulting in Tesla disrupt utilities as well as oil and gas companies. Meet Megapack. Megapack enables low-cost, high-density utility projects at gigawatt-hour scale. It ships ready to install with fully integrated battery modules, inverters, and thermal systems. 24 monitoring. With billions of cell hours of safe operation, our system delivered maximum reliability from transportation to installation, including a 24/7 monitoring from our network operation center. Take a closer look at the map right here, guys. We can see a global map of where some of Tesla's energy projects are. Look at this. There are tons in the US, some in Europe, Asia, and a few in Australia, I believe. Yeah, Australia. In a few years, the whole map will be green. Tesla generating, storing, and distributing energy globally. So right here we can see the products, and I decided for this next part to play a clip of another YouTuber called Solving the Money Problem, explaining what these products do. So let's take a listen.
AutoBidder. AutoBidder provides independent power producers. Once again, just pointing out that means you and I, like a typical residential person with some rooftop solar, producing their own power, storing it in a battery, have AutoBidder on your Powerwall, and you can actually participate in energy market arbitrage and actually use your own Powerwall and your rooftop solar as a money printer to autonomously print you money. Utilities and capital partners, the ability to autonomously monetize battery assets. AutoBidder is a real-time trading and control platform that provides value-based asset management and portfolio optimization, enabling owners and operators to configure operational strategies that maximize revenue according to their business objectives and risk preferences. Autobidder is successfully operating at Hornsdale Power Reserve in South Australia and through market bidding has added competition to drive down energy prices. Very good result. Here's a quick look at the Autobidder interface. Power Hub. Wait, what? Hang on a minute. Something's gone wrong here, guys. Power Hub. Power Hub is an advanced monitoring and control platform for managing distributed energy resources, renewable power plants, and microgrids. Let's have a look at this. Basically, I'm going to sort of translate some of the jargon here. Effectively, if you have a number of different energy generating assets, for example here, we have real-time power being generated with solar going into the Power Hub. We've also got some battery storage assets putting power in, and there's also some energy being pulled off the grid directly as well. This is the system for actually managing that. So this is the software that also powers the virtual power plants. So for example, you might have 20, 10,000, 50,000 different sources of energy on this network. That's the software that's keeping everything together. Microgrid controller. Tesla's microgrid controller autonomously maintains grid stability. Just want to take a quick step back here. Some of this may be a little bit technical, so if you get lost, just focus on the main thing there. This software is designed to maintain grid stability. In other words, avoid blackouts, etc. Usually, a microgrid is a collection of different energy generating assets all together. So this software is to ensure that it's optimizing everything, using the lowest cost sources of energy, not generating energy if battery is already full and there's no surplus that can be sold back to the grid, etc. So that's the point of this software. In fact, let's look at some of the features to help understand how this works. With a growing list of features, Microgrid Controller has the functionality to curtail excess solar generation when the loads or battery system are unable to absorb power, e.g. they're already completely full, start and stop generators as needed when the battery system reaches a low state of energy or additional power is required to meet loads, share power using a Droop-based system that prioritizes direct active control of assets while providing a passive fallback in the event of infrastructure failures. I mean, this is some serious software, guys. Shed predefined load groups at specific state of energy levels to increase renewable energy usage and reduce generator activation. Translation: simply optimizing all of the energy generating assets to prefer renewable sources of energy generation. Much better to be using solar than fire up a dirty generator using fossil fuels, right? Opticaster. Opticaster is Tesla's intelligent software designed to maximize economic benefits and sustainability objectives for distributed energy resources. A little bit jargony, but effectively, Opticaster is designed to prioritize renewable sources of energy and print as much money as possible for anyone with an energy storage or generation asset.
Proven expertise. Generated 150 million in the first 2 years of operation while helping prevent South Australia's blackout. Right here we can see currently participating in wholesale energy market trading in the UK, needing less than 2,400 square feet or 50 million watt hours of energy storage. This is literally Autobidder in the real world, printing money from existing storage energy assets. Right here, 52 million watt hours of storage paired with 30 million watt of solar generation provides energy shifting for the island while saving 1.6 million gallons of fossil fuel each and every year. To sum up on energy now, because a lot of these products today are commercial in nature and they are used by power plants, energy providers, utilities, etc., 99% of people are overlooking Tesla's energy sector. We're talking about a multi-trillion dollar market right here and people are missing it. And Tesla stock doesn't affect the energy sector as of right now. When some of these products become mainstream and Tesla have more revenues from them, people will understand the potential these products hold, and analysts will factor in energy into the stock price. We are going to see the stock skyrocketing. The last main point I want to talk about is Tesla's semi-truck. It doesn't get much attention due to the nature of the vehicle. It's not customer based, but it's used for businesses, so many people overlook it. Huge mistake. Tesla semi-truck will make billions of dollars in revenue and will disrupt this industry as well. Semi-trucks are used by businesses in every field: retail, transportation, clothing, food, beverage, etc. It's not in production just yet, but at the end of 2021 or the start of 2022, it will be released, and already many companies have reserved several semi-trucks. Now, in the US alone, there are over 3 million semis on the road, and fuel and maintenance are enormous. They wear out much faster than a car as they do many more miles than a normal vehicle. Tesla estimates that the return on your investment, if you are a company and you decide to purchase a Tesla Semi, will be about 2 years. Now, this company that will have purchased the Tesla Semi saves thousands of dollars every year on every Semi on fuel alone. Now, factor in the cost of low maintenance because it doesn't have an engine, multiply it across the whole fleet, and the savings are enormous. Also, Tesla Semis has better performance than the diesel equivalent, so the time of every trip will decrease, therefore cost savings will compound. More miles covered at the same time is a good thing.
The best diesel trucks can only do 45 miles an hour up a 5% grade. Tesla Semi can do 65 miles an hour up to 5% grade. That's 65 miles an hour continuous at max gross. What this means is that if you're pulling a load over the Rockies or some mountainous terrain up a hill, you're earning 50% more per mile than you are in a diesel truck. That's a gigantic difference.
To add to that, Tesla semis are way more safer than competition. Imagine how many miles each truck driver does. They are thousands or even more every single year from one truck driver. When these miles are safer, the danger of an accident is reduced dramatically.
What about safety? Now, when I say safety, I'm talking about the driver's safety. I'm also talking about other cars on the road. I'm talking about pedestrians, safety for everyone. If you've got 80,000 pounds moving at 60 miles an hour, it's a very dangerous thing. Every truck we sell will have enhanced autopilot as standard. Okay. The truck will automatically brake. It will actually automatically lane keep as well. So even if you're in the truck and you have a medical emergency, the truck will stay in lane and gradually come to a halt and put on the emergencies. If it doesn't hear a response from you, it will actually call emergency services and get an ambulance. It's going to take care of you. It's going to take care of other cars. It's going to take care of pedestrians. This is a massive increase in safety. A few other things about safety. With that central position, you're in a very safe position. Even if you were to collide with another semi, you have a low center of gravity that gives you really good handling. It means the probability of a rollover is massively reduced because the battery pack is in the floor pan, and rollover risk is dramatically reduced. And perhaps most importantly, jackknifing is usually the worst nightmare of a trucker. How do you stop your vehicle from jackknifing if you're in difficult conditions? The truck will automatically stop jackknifing because it's got independent motors on each wheel, and it'll dynamically adjust the torque on each wheel so that jackknifing is impossible.
Now, let's listen to Elon Musk talking about the cost savings.
The economics of trucking matter tremendously. If your cost per mile is too high, it doesn't make economic sense. You can't make it work. So we've really thought about this a lot. And when you take everything into account, you take the lease cost, the insurance cost, maintenance, all of the factors, the fully accounted for true cost of trucking, a diesel truck will be 20% more expensive than a Tesla Semi per mile. So a Tesla truck considered by itself beats other diesel trucks. But what if you have a convoy? So what if you have two trucks following? So you're more like a train driver. In fact, the convoy technology, the tracking technology, this is something that we are confident we can do today 10 times safer than a human driver. So I want to be clear, this is something we can do now. Now if you look at the economics of a truck convoy, it gets way better. Now a diesel truck is twice as expensive as a Tesla Semi. What this means is it's not just economic suicide to use one diesel truck, it's economic suicide for rail. This beats rail.
20% doesn't sound a lot, but it's huge. It's basically 1 in 5 of your semis is running for free. There is more though. Keep in mind this video is from over a year ago and they were that confident. Imagine now with a huge technological lead in the autopilot system. Also, I want to picture you all of this with self-driving. I mean, all of Tesla semis basically driving themselves. This is when things get insane. The savings are basically up to 30 to 50% more because full self-driving is more efficient, safer, and cheaper than having a truck driver. Now moving on to my final verdict. Those are the main points that I wanted to talk about regarding Tesla and Tesla stock. Keep in mind there are many things I didn't cover in this video, such as Tesla insurance, solar panels. It's different actually from the energy sector that I talked about, but it's kind of similar, so I didn't put solar panels in. Updated purchases, that meaning, for example, I believe over a year ago you could do an update through your phone that gave your car extra horsepower. With that said, I strongly believe Tesla will become the biggest company in the world in the next decade or so, and I will continue to buy Tesla stock as much as I can, especially whenever it dips and whenever I think it's a really good return on my investment. They have enormous potential, and Elon Musk never settles, and his team doesn't too. The biggest risk isn't to own Tesla stock. It's not to own Tesla stock.
We frequently speak with investors that say, Adam, I want to put together a long-term EV or AV exposed portfolio, but I'll never own Tesla. And we kind of take a deep breath and say, well, then you run the risk of not owning the company that could make all the other stuff you do own obsolete.
I hope you guys enjoyed this longer and more in-depth video. If you want to see more like that, drop a comment down below and tell me. Also, don't forget to smash the like button and subscribe to my channel for more content like that. That's it for me. Have a great rest of your day. Goodbye. Ooh. Shit.